Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Condon, along with Brianna Valesky, and we have Dan Zanger on the line. He's a momentum trader and founder of ChatPattern.com. He's the world record holder for the largest percent for a personal portfolio gain for a 12-month period of time and 18th period of time in the history of the stock market. Dan, how you doing this morning?
Doing real well. Thank you very much.
We'd love to talk about your story. Was that your first foray into trading?
The big gain was not my first foray into the trading. I'd actually been trading heavily for 6 or 8 years prior, lots of wild swings in my portfolio. It wasn't until the internet bubble got underway in February of 1998 that things really changed. I got spanked pretty hard up until that time. Actually, it was the hard spanking that really opened my eyes to how crushing the stock market could be, and really changed my way of thinking and belief in the market. The market is here to take your money. They're not here to make you money or to hand you a check. So once you get that, so to speak, under situation where you can control what they're trying to do to you, I think you're going to have a big turn of events in your own personal trading. So
talk about the lessons that were learned during that. I mean, it's always good to for traders to hear mistakes that other traders make and also their successes. But talk about what you learned. Was it adding to losing positions, getting opinionated, only playing one side of the market, or all the above?
Well, the market is here to take your money. Everything is lies and hypes. Upgrades come at the top of a market move. Downgrades come at the end of a market move after the market has moved down, or a stock has moved down. It's all lies. It's here to take your money. Never adding on a position on the way up, selling on the way up. Finding the right place to buy at the correct breakout area of a nice solid base. And then sell on the way up. Stock starts getting to be a little shaky, I just sell out completely. Might be shaky for a reason. There might be a downgrade coming. Might be an earnings surprise they're going to miss coming. Somebody knows something, so they're selling into strength. They're starting to liquidate. The stock gets a little sloppy at that point. At that point, I just sell out completely.
Okay, so your pattern, I mean, you don't get wedded to like one stock or a group of stocks. You like to move to where the money is, and the money is in the biotechs here. Just looking at the IBB, looking at that index, had a long consolidation period, broke out of it. Do you trade this index, and if so?
I don't trade that index. The XBI looks pretty good. The Spider ETF for the biotechs is good. I've tried that. I'm actually trading this little one called LABU. It's a 3 times the index, and it's at $52 now. I bought it at $46. It just broke out, so that's where I'm buying it at. And it's up to 52 now. You have to buy at the breakout. Or you don't want to be buying up here. The stock could, being a 3 times stock, could really get slammed. So it's definitely one you don't want to chase.
So will you? I mean, it's moving. I mean, it had like the 4 solid up days. Looking here, the daily. Then you kind of had the weekday, the continuation move here. Not a lot of history on this ETF. Just walk us through your potential exit plan.
Well, I think when biotech starts to tire here, probably be 6-8 weeks. That would probably be the time I'd want to exit. There certainly will be some down days. I'll probably be looking more at the XBI or the BIB to get an idea whether I want to exit this particular one or not. Certainly will be scaling out on the way up. I don't own a large quantity of it because it can be so volatile. But scaling out on the way up is what I do. People who didn't scale out, who bought into Ambella, AMBA on the way up because they had great earnings, just got hammered when this stock broke a very steep blow-off top, run that it had from 95 or 92 up to 128, just got absolutely slammed. This is not a stock I would have touched because of the type of run and the extension of the run that it was having. So that was definitely something that you'd want to steer clear of.
What now for what now for Amberella?
Pardon?
What now for Ambarella? You know,
Well, gapping up off the close and off the 50-day like this is probably the beginning of a retracement of some sort. Maybe it gets back to 105, 110, but probably will create a new base of some sort. I would say another 6 to 8 weeks, maybe 10 weeks, moves horizontal, back and forth. Typically when you break a steep rising trend line like this one did, it does a retest. So, it's not out of the question that it could get back to 120 before it gets slammed again. But definitely,
I don't know about that happening. There's a lot of people who love to see that back at 110, 115. You've been around.
Well, it's a very popular stock on social media, and these are the weak holders. Okay. They're not the big institutions, and these people are, buying after a stock is up, and they're the ones that get hurt the most. So that these kinds of stocks become very weak because you have very weak holders in the stock, and people chasing it at the top, and now they're underwater. They get margin calls. They're forced to sell. You're going to see a lot of whipsaw in this particular stock, and you see it in other stocks that are become social media darlings.
So you've been around for a while, made the money during the internet bubble. Did you make any money on the downside, or do you short stocks as aggressively as you buy them?
I didn't make any money on the big down move from 2000 to 2003. As a matter of fact, I got whacked on the big gap down when Nortel Networks pre-announced, and all of the fiber optic stocks gapped down $20 to $30 overnight. That pretty well tanned my hide pretty good on that move. So I didn't do well on the downside. I typically stay out on the downside. There are occasional situations where I was short a stock that's extended. Ambarella was not one of them, but eBay was in 2004. There have been many others over the years. I do like a stock that has run up with a very steep rising trend line channel and then short at the top as it breaks it. So for shorting, that would be where I'd want to be shorting. I don't just short in general because I feel like it or something. So it has to have, usually it's close to earnings. The stock has already run for 6 to 10 weeks or 3 months or something like that.
Okay, all right. So you like to buy stocks that are, coming out of the base here, and let's just look. The airlines have just really been beat up here, or we could just go to the transportation index here. Monthly, it still looks pretty good, but on a daily. Now, is this, walk us through here. I'm looking at the transportation index here. Is this, enough of a base, and does it look like it's breaking out to you?
The transport's pretty well beat up. They may be breaking out, so to speak, of a descending channel, but it's a very weak group. There's really no power in them. They're going to lag the market, so it's not really a sector I would be looking at. I think airlines are probably going to have some difficulties, moving back up. You have a lot of people who are at losses at higher prices. There'll be some sellers. Typically, I like to focus on stocks that are all-time new highs because everybody has a profit, as you know. They are less likely to sell, so the stock has a better chance of moving up quickly. Airlines have had a nice big run over the past 18 months, so a correction is, pretty much part of the game, so to speak. Revenues and earnings the rate of change is starting to decline. So, I don't see much liftoff in airline stocks.
Okay.
Pardon the pun.
Okay. Let's take a look here at, the biggest stock in the world, the biggest stock in the biggest index, Apple Computer. Any take on Apple?
Well, Apple's got a triple top. It's been forming since February. 3 times it's been back to the 134, 135 area. It failed miserably on earnings when it tried to break out there at the 134 area and just got slammed. Big key reversal bar in the middle of April. That's really dominating, controlling the pattern. It came back up for a retest here in May, failed again, so that's a triple top failure. Right now it's trapped between the 50-day and the 100-day. And it's had an awfully big run. Doesn't have an iPhone 7 coming out that everybody's racing out to buy.
Okay.
That was a big catalyst for this big move. I think the market's really on a wait and see, waiting for earnings and see what they do. If it clears 134, yes, I'd be a buyer at that point.
Okay, not liking the chat pattern there. Now, we're getting some questions here, and I know we've asked you this before about that run up that you had from the 10K to the 18 million. Was that verified on your site or by your brokerage firm or?
No, that was verified by an accounting firm that specializes in doing accounting work for portfolio managers. And it's on my website. You can see the audit there. Go under About Dan Zanger, and you can see the audit. Go near the bottom of the page, and you can still see the audit to this day.
Okay.
I then had Fortune magazine did an article on me about my percent being up 164,000%. I had to send them all my tax returns, all my trades. You know, back then you got your trade summary every month in the mail. Had to send them all my trades. So they had their accountants look at it. They had to send in my tax returns, money paid to the feds, and then they called my accountant to verify it. So they also took a look at it before they ran their article to verify, because they don't want anybody coming back.
Right, I know. Let's talk about a stock that's been in the doghouse a little bit. Twitter here, boy oh boy, got rid of its CEO, and I know you're on Twitter, right?
We are on Twitter. You know, do quite well. Twitter's quite the social media platform these days. Unfortunately, the stock is, like you say, in the doghouse. They really can't monetize in a fashion that, say, Facebook is doing. Also, you have a lot of people quitting because there's so much hate that's being transmitted around. You know, it's a tough platform really to get your message out, and you know, just people just love to hate. Period. And this is their forum for bashing people. And you know, I think it's going to have a tough go, just with the way that their platform is. And
well, the stock's
certainly there's much better stocks to own out there.
Right. And would one of them be Netflix?
Netflix is good. This new stock Fitbit is ripping really good. In our chat room, we are picking a stock up at $30.50, $31. It's now a couple of days later trading at 39. So, you know, you're making a 25% move here in a week. You know, this is serious change that you can be picking up. Stocks at new highs today. You know, looks like it's near record pre-morning volume here. Market hasn't even opened. Yeah, Netflix looks good. Some of the security stocks look good. Certainly the biotechs are looking terrific. XON is looking really good. TTPH. God, there must be 20 great-looking biotech stocks out there that are. Gilead is looking terrific right now, even though it's a little extended. And the list is long.
Do you have a target on Fitbit here? Or are you just going to trail a stop?
Well, I mean, Fitbit has similar growth characteristics that GoPro had in the beginning, and much better characteristics than Shake Shack, both of which we had at very low prices on my website. I would not be surprised to see Fitbit trading at 50 shortly, and then possibly maybe take a rest for 6 or 8 weeks, and then possibly surge to 80 or 90 from there. Earnings are up like 250%. Revenue's up 475%. You know, it's nobody owns it, so to speak. There was not enough shares to go around. You know, it has all the classic signs of a stock that wants to go much, much higher from here.
Okay, so not looking at any target. You said 80, 90. I mean, is it making that much money?
Actually, it is. It's only trading at a PE of like 35 or 40. It's 200 million shares. It's making like 80 cents a share. It's making a lot of money. Certainly much more than Shake Shack is, with a far cheaper valuation. And far greater growth rates. And Shake Shack went to 93. We had it at 50 on the website. It raced right to 93.
Yeah. What do you think now?
You know, each shack is valued at $50 to $60 million for a hamburger stand. I mean, talk about goofy moves in a market.
What do you think
this
about
is incredible.
What about the pullback here in Shake Shack here from that?
Oh, the stock's dead. Stock's dead. Nobody wants it. I mean, the stock was trading 3.5 million shares a day. Now it trades maybe 150,000 shares a day. Nobody wants it. Can't give it away. Stock's totally dead.
Okay. All right.
On to the next. You know, my favorite word in the stock market is next.
Okay. So we got about 5 minutes left here in the segment here. You mentioned a lot of stocks here that you're looking at. What anything else? Maybe something that you like stocks forming a basing pattern and then breaking out. Any other ones
Hmm.
that of interest that we can take a look at?
Well, it looks like a 30-year bond wants to move higher. The TYX, interest rates are going up. That's the 30-year bond yield. That generally means you're having a stronger economy. Of course, that would be well for transportations, but again, I think they're going to lag. Under Armour looks good. Lululemon looks good.
Okay.
If you want to, these stocks are creating nice bases, and Under Armour is just starting to come out of the base, even though it's very expensive. NDIX has a super base just starting to come out.
Okay.
Just you can't get better bases than this. Exxon, XON, is not the oil company. It's Inter-Exxon Corp. Tremendous saucer pattern over the past 6 months, 5 months. They're just starting to creep up out of it now. Really great earnings and revenue growth.
Okay.
There's just
Question
dozens and
coming out.
dozens and dozens.
Question coming out of the chat, Dan. Do you use relative strength for relative strength line for new heights as one of your indicators?
I don't use relative strength line. I quit using that probably 20 years ago. I think for the newbie, it's good because they get a strong sense that of what is leading the market. But typically when a stock has gotten up to an RS 99, relative strength 99, it has become very extended and becomes vulnerable to breaking down at that point. I think that's one of the big mistakes that newbies make, that follow that line and think that's that's it. They found the magic sauce, so to speak, and they've got to have an RS 99 stock. Next thing you know, the stock gets totally slammed, like an Ambella had an RS 99. I mean, I can imagine it had an RS 99 because nothing else was going up like that. It had to be an RS 99, and it just got absolutely smoked. So I quit following that. It's good for newbies to kind of point them in the right direction of what is a strong stock, which stocks are strong now, and then they can kind of follow that. But I kind of if a stock is based for a long time, 5 or 6 or 7 months, that RS has gone down to an 80 or 75. And then the stock breaks out and then runs, and then after 3 to 5 weeks or 6 weeks, it gets up to RS 99. At that point, it's too late. It's already made its big run.
Are you getting
So
worried about this XON here at 98 RS rating, or?
XON?
Yeah.
I'm not worried about it. It's just coming out of a base.
Okay.
So it's in a very strong group, probably the leading group at this point. So I think it's probably looking very good. I'd like to see some more time, some more rest on it, a little downside action. I'd give it more of a handle here, creating a saucer and handle. You could say a cup and handle. It's a little long in the tooth on the length, so I'm calling it a saucer. That's a, what is it, RS 98. But I don't even look at that. I'm just looking at the pattern.
Okay. All right. Any
I want to get in earlier than I want to get in later. We had it at 44 on my website. It's now at 50. If we had it at 44 last week, a week and a half ago, it's at 50 now. And I think it could be, $60, $70, within the next month. So I think that's pretty good.
Dan Zanger, momentum trader and founder of chatpattern.com, joining us on Benzinga's pre-market prep. Thanks a lot, Dan. Great interview.
Hey, thank you. Appreciate it.
We'll talk to you
soon.
again soon.